Hey there, planning on doing some business in India, even for a short while? That's awesome. But there's one really important tax form you've got to get the hang of, the GSTR-5. Don't worry, in the next few minutes, we're going to break it all down for you, nice and simple. So let me guess, you're heading to a big trade show in India to show off your products. Or maybe you've landed a sweet consulting gig that'll last a couple of months. You're focused on knocking it out of the park, but have you thought about the tax side of things? Yeah, that's where this one form comes into play. If you're doing any kind of temporary business in India, you absolutely have to get this right. Trust me, mastering it will save you so many headaches down the road. And that form is the GSTR-5. So here is what we're going to cover. We'll start with who exactly needs to file this thing. Then we'll talk about beating the filing clock. Those deadlines are no joke. We'll get into the nitty-gritty of what tax credits you can and can't claim. After that, we'll take a quick peek inside the online GST Portal. And we'll wrap it all up with how to file, fix any mistakes, and even get a refund. Let's do this. First things first, let's talk about NRTPs. You've got to understand who you are in the eyes of the Indian tax system before you can do anything else. So what in the world is a non-resident taxable person, or NRTP? It's actually super simple. If you're a person or a company from outside India and you're there temporarily to sell goods or provide services, bam, you're an NRTP. Picture a German company selling machinery at an exhibition in Mumbai. For those 20 days, they're an NRTP, and the GSTR-5 is the tax return they have to file. Okay, but hold on. Before you can even think about filing, you need to get your ducks in a row. You have to be officially registered as an NRTP. That gets you your golden ticket, a valid GST identification number, or GSTIN. And of course, you'll need your user ID and password for the official tax portal. Without these three things, you're not even at the starting line. So now you know who needs to file, let's move on to the really big question, when? This brings us to Section 2, and it's all about the clock. When it comes to GST, let me be clear. Deadlines are not friendly suggestions. They are crucial. The deadline rule is a little tricky because it's a whichever comes first situation. You have 2 dates to watch. First, for any given month, your return is due by the 13th of the next month. And hey, quick heads up, this used to be the 20th, but it changed in October 2022, so make sure you're using the new date. The second date is your final deadline. That's due within 7 days of your registration expiring. Whichever of those 2 dates comes up first, that's your deadline. Let's make this crystal clear with an example. Imagine your registration is valid from late September to late November. For your business in September, the return is due October 13th. For October, it's due November 13th. But here's the kicker. For November, your registration expires on the 23rd. 7 days after that is November 30th. Since that's earlier than December 13th, your final deadline is November 30th. See? It's always the earlier date. And here's a little pro tip for you. Whatever you do, do not be late. Seriously, every single day you're past the due date, they tack on a late fee. So staying on schedule isn't just about being organized. It literally saves you money. Okay, on to Section 3, Input Tax Credit, or ITC. This is the good stuff. It's about getting credit for the GST you've already paid. But, and this is a huge but for NRTPs, there are very specific rules about what you can claim, and more importantly, what you can't. Okay, listen up, because this is incredibly important. As an NRTP, you can claim tax credit for the GST you paid when you import goods into India. Period. That's it. You cannot claim credit for GST paid on local stuff you buy in India or for services you import. The rule is very, very specific. Only imported goods count. Let's make this super practical. You're in India for that trade show, right? You're staying in a hotel. Your hotel bill has GST on it. Can you claim that back? The answer is a hard no. A hotel stay is a local service, so that GST is just a cost of doing business for you. It's an expense you cannot claim back as an ITC. All right, let's get practical and move on to Section 4. We're going inside the GST portal. Think of this as your digital filing cabinet, where all the action happens. So how do you actually do this? First, you log into the GST portal. Then you just navigate through the menus. Click on Services, then Returns, and then the Returns dashboard. Select the year and the month you're filing for, and you'll see the GSTR-5 option. Click that to get started. And remember, this whole process is online only. There's no paper form or anything you can do offline. When you go to pay your taxes, the money is handled through something called an electronic cash ledger. The easiest way to think of this is like a prepaid tax wallet. You put money into it, and then when the system calculates what you owe, it just pulls the payment from that wallet. Simple as that. On the portal, there are two key buttons you need to know. After you've entered all your sales data, you'll hit Compute Liabilities. The system then does all the heavy lifting, calculating the tax you owe plus any interest or late fees. Once that's done and you're happy with it, you click Proceed to File, which takes you to the final payment and submission screen. We are in the home stretch now. Section 5 is all about the final steps: filing, fixing any mistakes, and getting your money back. Let's walk through it. So it happens to the best of us. You've entered all your data, you're about to submit, and then you see it, a typo in an invoice value. What do? Did you just mess everything up? Well, first, a major warning. The moment you click that final submit button, that month's return is frozen in time. It is locked. You can't go back and edit, add, or delete anything for that period. It's final. But don't panic. There is a fix. Any corrections for a previous month's return can be made in your next GSTR filing. So if you made an error in your September return, you simply correct it when you file your return for October. Whew! So here's your final checklist. Before you submit, always use the Download Summary button to get a PDF and preview everything. Once you're sure it's perfect, you'll sign it digitally. And last but not least, after you've filed and paid everything, if there's any cash left over in your prepaid tax wallet, you can apply to get a refund. Okay, let's do a super fast recap. GSTR-5 is mandatory for NRTPs. It's online only, and those deadlines are serious. Your tax credits are limited just to imported goods. You fix mistakes in future returns, not past ones. And remember, filing late will cost you. Look, GSTR-5 doesn't have to be this big, scary thing. It's just a process with some clear rules. Now that you know them, the only question left is, are you ready to go out there and conquer your Indian tax compliance?